Welcome back everybody, Sive Morten is here with the ForexPeaceArmy.com. Let's take a look again on euro currency. So things that we discussed yesterday about the retracement mostly has been realized here. As you can see, it's drop down to the 117 here, the first support that we discussed has happened, and that actually leads us to conclusion. So as we said, that if market somehow will stop around 1740, 1730 support and turns up, then probably we will get upward continuation higher. So might be either action to the 118 area or even straightforward upward continuation. In this case, we could say that this probably will be the shoulder and market just challenging the neckline. If in turn the market drops down to the 117, it means that we could get deep retracement in current circumstances. Of course, this time it also was not without external factors. So you know that BLS revision of the employment data was just terrible. It's more than 100,000 jobs in fact never existed, and in fact the half of the created jobs during the Joe Biden term, second term, also have no existed. When in the previous year, last year, in year before, we talked about the political struggle inside the United States in our fundamental reports, when Donald Trump sit on the benches in different lawsuits. So we said that the Democrats could prepare for them a surprise if they start to distort the statistics, accumulating the deviation from the real data. At some point it might be disclosed, and it will be the cold shower for the new administration. So all the problems and really the economic conditions that market that really appears to, it's all this stuff that Donald Trump will have to deal with. Not only Donald Trump, but all his team, Bessent, Powell, and others. And now it seems that point is coming. So of course we can't put all this stuff in just one single session, but that event might have really far-going consequences. Why actually we have here the drop? Why it has happened? Just because this is reassessment of the rate policy from the Fed. With this new data and contraction of the job market, investors start expecting a fast rate cut from the Fed. But you could ask why the dollar is rising. Just because it's changing of the sentiment. When economy turns to the recession, usually it is slowed down and nominal inflation starts dropping. In this case, the real rates usually standing in a positive area or moving higher, because Fed is cutting rate slower, and the real rate appears to be on a positive in a positive sign. So that might be that just the new expectations, new changing of the view on economic conditions. So it seems that recession stands currently closer, which suggests more aggressive rate cut from the Fed, and correspondingly maybe the slowdown on inflation. So this of course can't just in one session, you can't on the daily chart to say it's actually that is already is done event, but that might be just the changing in minds, and you can see what has happened. From the technical side, in fact, we've got this great engulfing pattern with a minor wash and rinse, which suggests some more extension to the downside. On the full time frame chart, what we have 117 is the first area that we discussed. Now it's market stands here. You can see that market has formed bearish reversal swing, so you can see that swing down is greater than previous swing up. Correspondingly, it's big chances that after some minor pullback here, we could get a kind of downside ABCD shape, which is lead us directly to the suggestion of the possible hand shoulders pattern that we discussed yesterday. So maybe it will have not just quite horizon neckline, but some slope, but generally you understand the idea. So what we could do currently, usually when the markets start forming the hand shoulders patterns, and actually you would like to trade as a hand shoulder, this point is most safe point for taking the long position. Why? Because you're at support, you have probability on your side, because in the majority of cases market shows this second shoulder but not showing the direct straightforward downside breakout. So this risk exists, but it is less than chances that shoulder will be formed. And if you take long position here, you simultaneously possessed as for right arm forming when you could close on the top, as for the possible hand shoulder failure. For instance, if market just showing signs of the upside breakout, keep going to the upside, you see that hand shoulders is failing and you already have the position. So that's the attractiveness of the taking long position on the neckline. Finally, you have relatively tight standing stop, so all you need to do is just place the stop somewhere below this area, maybe below 1670 if you would like to. How you could take the position. Here you could watch either for some classic patterns or Napoli patterns. For instance, here might be some kind of the double repo buy. If market will move slightly higher, close above the 3x3 moving average, that might be the double repo buy pattern, and you could take position with it. If you're not familiar with the Napoli patterns, you could drop your time frame, say to the 15-minute chart. What you could see here. First of all, you could see for possible hand shoulders as well, right? So it might be shoulder, head, another shoulder might be formed. Here is you could also watch for, I don't know, some kind of the diamond shape or something. As you can see, there's widening, triangle is forming, so it might be some kind of the diamond shape. But anyway, if we are correct in this solution, in this suggestion, probably market has to stay above these lows. That clearly indicates you what particular, where you could place your stop, whatever pattern will be formed. So that towards what I see currently on Eurocons, which looks more or less attractive, or at least possible for trading. So decide what you like to. If you just would like to take the short position, of course you do not need to trade it on the long side. You need to wait when this pattern will be formed and make a decision on the top of the right arm. As usually we do, drop time frame lower, watching for bearish reversal patterns on top of the right arm, taking the position. So depending on your view on the market, what the position you would like to, in what direction you would like to trade, you could make your own decision. But in general, currently we see these two things for trading. Possible scalp long position on hourly chart with the minimum target around 1750, somewhere in this area, or as a maximum for possession for possible upper continuation if hand shoulders start failing. Second, possible hand shoulders with the position taken around the same 1750 with the more extended downside action to the 1660, 1650. By the way, if you take a look, this target precisely coincides with the confidence support and lower border of this channel on the 4-time frame chart. So some kind of the ABCD here easily might be formed. Just be aware of the coming numbers on inflation. This really could bring lots of mess in the technical picture. It's another risk factor. But based on the picture that we see, situation stays as just we discussed. So that's all for now. See you tomorrow.